Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. Welcome back to the show, John.
Jim, it's a pleasure to be back.
John, Great Bear Resources reported additional drill results last week for the Dixie project in the Red Lake region, and the stock dropped. What is the market unhappy about?
Yeah, as we discussed last week, Jim, the market seems to be unhappy about anything except bigger and better results. A year ago, Great Bear kicked off from its 20, 30 cent level with fantastic results from the Dixie Limb Hinge Zone. Very high grade, Red Lake style mineralization. The market loved it. It hoped that there was going to be another, multi-million ounce high grade Red Lake equivalent discovery of the sort that, built Gold Corp into what it is today. But that zone itself, they've chased it about as deep as they can, without getting into very expensive drilling or doing a decline. There's not a huge amount of tonnage there. But the big switch earlier this year was the realization that this LP fault, this 15 to 20 kilometer long fault, which is a structural break similar to the Cadillac Larder break in the Abitibi Greenstone and the Destor Porcupine, this has the same sort of potential for gold mineralization as these others, the Timmins Camp, Kirkland, Val-d'Or, all that sort of stuff. And that got the market really excited in the last few months when they started hitting zones that had high grade and said, oh, wow, this is going to be fantastic. It's like, there could be a, 10, 20 million ounce system here. And that's what took the stock to as high as $9.50. And earlier this, in September, McEwen Mining liquidated its entire position that it had bought a year ago into the market at that sort of $8 to $9 price. And yet today, as a result of the latest results, the stock is down to $6.50. And you ask yourself, what is going on here? Well, the latest results are of these sort of broad intersections of low-grade gold mineralization that's at a depth that's too deep for that to be interesting as open pitable, and of course it's too low grade to be underground mineable. But what the company's doing right now is, doing broad-based drilling just to sketch out the scale of the system to get its bearings, and so these lower grade results, the market wants more really good stuff where you can start homing in and delineating a resource and say, yeah, we have 1 million ounces of 1 ounce gold in this particular location. So I suspect the sell-off is the market losing patience with something that's more of a conceptual demonstration project, and we are in a sort of a market climate right now which has gone really, really bearish, as we discussed last week. Sun Metals, which managed to raise money, it managed to break below 20 cents today. Solstice Gold, lost 65% of its value when the first 6 holes on a giant grassroots greenstone belt play didn't deliver a discovery hole. GT Gold, which is one of our Golden Triangle companies that is outlining a Red Chris lookalike at the North Saddle project, at the Toga project, it sold off today with the latest round of results. There is a bearish mood in this market, which is really disturbing. Even though gold is, still here in the $1,470 to $1,500 range, the move from $1,200 to $1,500, it's as if it didn't even happen. And one of the anecdotes making the rounds on the street is that, about several $100 million were raised in that sort of June to August period, with Eric Sprott leading about $170 million of that, and now Eric Sprott sort of paused to look around and said, nobody is following through. It's as if a few people said, we're in the beginning of a major gold market, but the general market is not buying it. A stock like Great Bear should not be selling off. They're in the midst of a 90,000 meter drill program. They still have $17 million in the bank. But then you ask yourself, did McEwen Mining do the right thing when it sold its entire position? And in a recent episode, I speculated that, well, Rob McEwen himself did not sell any stock. Maybe the board forced him to sell that stock, because they needed money. So Rob called me up and wanted to clarify that no, the board does not tell him what to do. He tells the board what to do. It was his idea to sell that stock. McEwen Mining has had a bit of a cash flow problem due to problems at the Black Fox mine and delays getting the Gold Bar mine commission. So he made the decision, okay, we'll take advantage of the volume, the demand right now, and liquidate the position and stave off the wolves that want to be paid for the services that they're doing. And McEwen Mining just put out a news release today that the Gold Bar mine is now commissioned. It's operating. It only has a 7-year mine life. It's an oxide heap leach operation, but they're doing additional drilling on that, and it's part of this new trend of, okay, let's focus on Nevada. They did report that the first hole intersected the right sort of rocks that would host Carlin-type gold mineralization beneath the Gold Bar system, but they had snake eyes in terms of gold values, and they have another hole pending. See what that has with Carlin-type systems. You never know until you get the assays what you have there, and it just goes to show you that you can be right next to an existing deposit, 500,000 ounces, and still come up absolutely empty. That's how tough a game it is in Nevada. You need to drill multiple holes to vector in, map out the context, and home in on it. But it's good to see McEwen Mining shifting now to exploration to expand its Gold Bar play in Nevada. But as for Great Bear, this is just part of this market funk. Gold not really performing despite ever more uncertainty about the future. The IMF this week said, growth for 2020 is only going to be 3%, not 3.8%, all related to business pulling back with regard to the trade war and things like that. And then we have this unfolding fiasco in Syria, which seems to be something worse than the withdrawal from Vietnam, the Saigon moment when America retreated with its tail between its legs. And here we have done the same thing. The Russians are now in Syria. The Kurds have thrown their lot in with the Syrian government. The ISIS prisoners have all been released, or who knows what's happened to them. So it's absolutely bizarre what is happening, and yet gold's sitting here as if everything is perfectly normal. And the market, it's expecting gold to really go on a tear, and it's resisting the juniors because it's not seeing what it thinks the gold market should be doing, and fears a worst case scenario of gold actually retreating back to $1,200-$1,300, similar to what was the experience in 2016 when we had that nice 8-9 month window where it looked like the bear market that began in 2011 has turned around. Personally, I think the bear market is at the end of its life, that we're at the beginning of a gold-driven bull market, but the market wants to see validation in the gold price before it really takes the juniors seriously again.
We'll have more with John Kaiser right after this.
Cyprus Development Corp is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cyprus Development Corp trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cyprusdevelopmentcorp.com.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with John Kaiser. John, Azimut Exploration put out an update on its Pikwa project in Quebec. Is there new hope that your James Bay area play will become a reality?
Jim, next week I will be in Montreal for the Explore conference put on by the AAMQ, which is the Mining Association for Quebec. It's a mini version of the PDAC that's focused on Quebec exploration and mining industry. And I'll be giving a talk on Wednesday about what does it take to bring back lost audiences to the junior resource sector, in particular the Quebec juniors. And earlier this year I had high hopes that the James Bay region would become the focus of a major area play driven by the emergence of copper as something with world-class potential in this part of central Quebec. And of course, leading the charge was Midland Explorations with its Mithril discovery, which it unveiled at last year's Explore conference in Montreal, which I also attended. And unfortunately, the drilling that Midland has done has failed to demonstrate that this high-grade copper mineralization comes together in large enough zones and grade to make even a modestly mineable, let alone a world-class configuration of copper mineralization. And so that has been sort of a big disappointment this year so far. And Azimut was part of the sort of area play story because they own the Pikwa project extends to the west of the Mithril trend. And Midland's now traced it for 4 or 5 kilometers, and it all seems to be more of the same sort of a high-grade copper in the contact between these granite dikes that are in this granodiorite intrusion, but it's just in these in the contact zones where the grade is elevated. Otherwise, it's too low grade to be to be of any economic interest in this region. But when Azimut got my attention earlier this year, when it published the results of a lake bottom sediment geochemical survey that they had done in 2017 that built on an older one, and it completely redrew the map of where the copper geochem was. And it clearly showed that to the west of the Mithril showing, where Midland was stirring up all this excitement, had found boulder fields, there was a very large copper anomaly. And what Azimut reported today was the results of, or half of the results of its summer field program, where it went in there and did mapping and prospecting, and has shown that, yes, extending to the west of Mithril for at least 5 kilometers, there are boulders with a high-grade copper mineralization. There's outcrop with a high-grade copper mineralization. The boulders to the west, they do not have assays yet, but you can tell from the visuals that they're going to be interesting. So this system is a very large system. It's at least 10 kilometers long, and based on their geochem footprint, which sort of fades out to the west, they feel there's maybe 15 kilometers of a system that's been pumped by copper-bearing hydrothermal fluids, and it fades out to the west because the till cover becomes thicker, and so you wouldn't expect the lake bottom sediment to accumulate as much copper value. But the big question for the market is, if they go in there with a drill program, are they going to get more of the same? And the market's attitude is, Azimut barely traded today. The market's view is that this is a failed system. It did not really concentrate the copper anymore, and yet the widespread nature of this copper mineralization tells you that something really big was going on. And another example of how negative the market's become about this copper-based James Bay area play, 92 Resources Corp, which was sort of like the peripheral long shot, the super cheap junior that could have benefited. They did a summer sampling program, and they released the results in 3 batches. The first batch involved the copper results, and this was new information. This showed that there was a parallel trend of high-grade copper in a different host than we see on the Mithril property, but interesting values and only sort of 5 kilometers to the south. And the stock kind of did a slight little blip ahead of this and then faded away. Then the company decided to release the gold results, from a parallel trend where Virginia Mines had done a bunch of drilling a number of years ago, and the market realized, well, this was nothing new, so that took the stock lower. And then from the lithium sampling that they did on the Corvette portion of the FCI Corvette project, when those results came out, the stock went even lower, since nobody these days wants to hear anything about lithium. And so that company is biting the bullet and doing a 10-for-1 rollback tomorrow and a name change to Gaia Metals. We'll have to see what happens post-rollback, but it'll be interesting to see, because next week at the Explore conference, Midland has yet to tell us anything about what's going on its Mithril project. We know they were doing more work to the northeast of the area that they did drill. It would be extremely disappointing if Gino Roger did not release something new that would rekindle the interest in this play. For now, we're just going to have to shrug and wait. We do not see evidence yet for a great Canadian area play in the James Bay region, but next week could be interesting. We'll see if we get new life out of this, and we'll be doing our Discovery Watch session next week from the floor in Montreal, talking about some of the juniors that are Quebec-based that we are following in Discovery Watch, and maybe some new ones too.
We'll have more with John Kaiser right after this.
Aven Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Aven's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avenresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with John Kaiser. John, why did West Haven Ventures stock price drop after it put out drill results today for the Shovel Nose project?
The results, they had a headline of some high-grade interval, which is what we've come to expect for this low sulfidation epithermal discovery in southern British Columbia. But what the market was focused on was hole number 22. And just as a background, late last year they drilled a hole that was a step out to the south of the South Zone where they'd found the high-grade veins in September, October last year. And this hole came up empty because there was a fault, and the concern was that the fault had uplifted the area south of the South Zone and the vein was gone. Well, in late August they managed to drill a hole that's 100-meter step out south, and it picked up a quartz vein system. But the results, although the company did not mention visible gold or anything like that, the results were only 3 meters of half-gram gold and 1 gram silver, which is not very interesting at all. And then a little bit deeper in the hole, 1.75 meters of 0.65 grams and 1.7 gram silver. And the market was probably hoping for something better, even though, when at the Metals Investor Forum where they had put out the news release, it was evident that they didn't think that they were in the sort of richer boiling zone area. And in fact, the surprise is the sort of Ginguro mineralization that they had shown with all the all this kind of stuff that you find in these low sulfidation systems. That was from 350 meters down the hole, and that actually ran nothing. So again, you can never tell in advance unless there is visible gold whether it will run. The part that did run was between 227 and 237 meters where they weren't really expecting anything. But they have picked up gold mineralization to the south, and they have drilled an overcut hole to try and see if they can get the system higher up in the boiling zone. But since there's now no real body language or noise on that regard, the market is assuming that everything has bombed out to the south. And the other holes that they've shown in the plan that they drilled to the south of that fault, they're off a bit to the southwest, and they were testing geophysical targets there so that you can get a better understanding of how the rock geology and then the quartz veining connects with the geophysics that they've got for the area. But the good news that seems to be lost in this news release is that they have now stepped 100 meters to the north of the south zone, and hole 31 appears to have intersected something very interesting. And if you look at the plan map, you can see that last year they ended up deviating away from the main alpine trend area based on Peter Fischl's interpretation of the structural geology, and came up with the discovery that got everybody very excited. And those holes that were drilled at that sort of section level, they're all oriented more to the southeast and would have missed the veins that define the south zone. So now they're marching to the north, and they're extending the zone to the north, and the next round of results are expected sometime in sort of early to mid-November, so the market's going to have to cool its heels in the meantime. But they did manage to get $6.7 million financing done out of the $7 million that they announced in September at $1.05 for a unit. The stock has pulled back. Their treasury is cashed up. They've got about 8-9 holes pending in the lab right now, and they are continuing to do step-out drilling. And also coming up will be what they call an exploration update, which will tell us what all that field work that they did in the summer beyond the South Zone came up with. And what they have shared earlier at the Metals Investor Forum in their presentation was that the gold values are showing up not just in soil samples all over the property, but also in subcrop, and that this project to the south, the southern part of Shovel Nose, which has historically been ignored because it's largely overburden covered, this is shaping up to be an absolute treasure hunting ground, and it really makes no sense that the stock is selling off today. It's part of this general trend that unless you get bigger and better, you're doomed for failure, and people are exiting the market. When this funk will end, I do not know, but it's certainly creating some excellent bottom fishing opportunities in the junior resource sector.
John, before we go, can you again just tell us a bit more about the Vancouver, or I should say the Montreal Explore Conference?
The Montreal Explore Conference, it's one of these conferences that isn't free. It costs $400, $500 or so to attend. It's at the Queen Anne Hotel in Montreal. It's a 2-day affair, and a lot of the presentations are in French because it is a Quebec-focused conference. It's a technical conference as opposed to a retail conference. There's only maybe 15 or so resource juniors presenting. There's far more of the equipment providers and technical service type companies that are present at it. But it is a gathering for everybody who's involved in the sort of Quebec exploration sector, and I always look forward to it. And this year, it's in an old style hotel. It's not in that Soviet style bunker where they had it last year, which is all concrete and cavernous and doesn't give you that sense of coziness that you want to see for an old style technical conference, the way it would be when it would be in Quebec City, where they had it in an excellent location, but the whole conference became too big for for that location. So now it's in Montreal. So I'm looking forward to this conference.
John, thank you so much for the update.
You're welcome, Jim.
We've been speaking with John Kaiser, his website, kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Discovery Watch is a production of How Street Media Incorporated.